Jeff Housenbold, it's been a rough 3 months for Shutterfly stock. It's down around 20%. And this has been kind of surprising to me because you beat the street, I think it was in July in your second quarter, but the traders and investors have kind of cooled toward the stock. What's going on there?
Yeah, not overly worried about the stock price in the short term. As you know, the entire market is down. The Russell 2000 is down about 12% from its high. So we're getting swept up into the overall market malaise. But we anticipate this year being another year of record revenue, record EBITDA, and record free cash flow.
Well, on the call at the time, there was worry about your consumer business. Of course, you know, Wall Street, they can worry about a lot of things. They were worried about your consumer business. Can you focus on that?
Yeah, the consumer business is now made up of 7 different brands, each one targeting a different niche of the marketplace with a different offering and different brand promise. And our consumer business is doing really well. If you look at the overall percentage growth rate, the street has us about 15% for the full year. Our enterprise business is growing quite nicely, which is utilizing our assets more effectively and driving incremental free cash flow for our shareholders.
All right, so let's get back to the consumer business. You have Halloween coming up, then Christmas. Can you talk about your plans? Because a lot of people print stuff, they put it on mugs, they put it on calendars. They use your service quite a lot.
Yeah, people love Halloween, right? And taking pictures and being able to share them with grandma and the family. And so we see tremendous amount of uploads during the Halloween period and printing. And it's great to get the customers re-engaged during the early part of Q4 as they head into the holiday. We do about 52% of our annual revenue in the fourth quarter, and we do about 41% of annual revenue in 21 days.
All right, still this year, I think the street expects you to lose, I think 16 cents, and then next year make 45 cents. Can you address profitability?
Yeah, that's on a GAAP basis. We have a number of restructuring charges and amortization of intangibles that are flowing through the P&L this year. But if you look on a free cash flow basis, how much cash is left in the business, it's going to be a record year. Its free cash flow is growing meaningfully faster than revenue.
All right, and then finally, I want to talk to you about all these unicorns we've been seeing all over, because I think Shutterfly's been public since 2006, and now you're seeing all the attention placed on these unicorns, which are pre-IPO companies with valuations of more than $1 billion. What's your view or advice for some of these companies from someone who's been there for a while?
Yeah, if you look at the headline number, the private valuations over $1 billion is a little bit of a misleading notion because the last money in has preference and liquidation rights, and so they're not so worried about what the post-money valuation at this point is. I think given about 140 global unicorns, about half are going to go to zero, and about a quarter are going to have down rounds when they go public, and about a quarter of those are going to do great, right? So you're going to see a lot of shakeout over the next few years. We have over $1 billion in revenue this year, right? And we're generating meaningful amounts of free cash flow. So I think my advice to unicorns is figure out not how to just get big, fast in user metrics or even revenue, but make sure you have a sustainable business model before you think about hitting the public markets, because those quarterly earning calls are going to come, and if you're not making money, it's going to be a tough ride.
Well, just one quick follow-up. Do you feel like these unicorns are stealing a lot of thunder and money from established companies like yourself?
No, I don't think they're stealing money from us.
Talent? What about talent?
Talent, they are definitely hiring and using that venture capital money to ramp up, so it does impact the overall hiring environment in Silicon Valley. But public investors are looking for more places to put their money. With all the share buybacks, with all the mergers and acquisitions, with companies now taking about 14 years to go public versus 4 in the 99 bubble, there's not enough places for people to put money.
All right, well, thanks a lot, Jeff.
Thanks, good seeing you.
And thank you for watching The Street.